Welcome back to the channel. Welcome back to another video. I'm excited to talk to you today because if you've been following the channel in the past, you know that today I like to do a financial update on the last trading day of each month. And so with February having 28 days, it's a short month, and I want to get right into it. But for this financial update, it's going to be a little bit different than the ones that you have experienced in the past if you have watched any of my financial updates that I've done in the past. What's going to be different is I'm going to talk about three things in this financial update. I'm going to talk about the major events that occurred in the month of February. I'm going to then talk about some important dates to look out for the month of March. And then finally, I'm just going to give you some updates, what we did, some purchases we made, some staking that we did for our portfolio. So with that being said, let's not waste no time. Let's get right into it right after this. So the month of February was jam-packed with so much stuff going on. At the beginning of the month, it was all about inflation. And then at the end of the month, and currently what we're experiencing right now is this Russia and Ukraine war. And so I just want to kind of go off a couple of the major things that we saw, just to remind you, and or if you didn't get to see it, give you an update on what we experienced. And so for CPI, we got a 7.5% year over year increase. So that means, inflation is going heavy. And that was at the beginning of the month what was really scaring the market because prior to the Russia-Ukraine war and the invasion that occurred, we thought that the Federal Reserve meeting that we're going to be seeing in March was going to be very hawkish in the tune of, heavy interest rate hikes. Now, with a couple things kind of going on that possibly might not look and or they have a scapegoat not to raise rates so fast because now they can kind of blame it on the supply chains, the issues, the Russia-Ukraine war, and put some of that inflation and try to go back to that transitory argument that they have been saying for such a long time prior to the change in tone kind of December, January. Anyways, and going on from that, we got a 0.6 a month-over-month increase. So that's, again, kind of 0.6 is when you elongate that out for a year, that's 7.2. So we're kind of right in line with the 7.5, and inflation is increasing. What was somewhat of a surprise is the amount of jobs that we saw in the month of January. So the number of jobs increased by 467,000 jobs in the month of January. So that was a great, feeling for the market. Again, this is prior to the Russia-Ukraine war. Federal Reserve is all about maintaining employment for as many people as possible, as well as controlling CPI to a 2% kind of annualized basis. And so, again, with job numbers coming in so high at the beginning of the month, this was another reason for the market to be somewhat scared because it told the Fed that they can raise rates even higher if we have employment going in the right direction. Again, all of that has been changed, and so this month was a great example of, the first half being, one direction and the market being focused on one thing, and then now the market has completely kind of turned their attention to Russia. The biggest increase we saw was the leisure and hospitality, 150,000. What was pretty interesting in reading in the BLS, the Bureau of Labor Statistics, was that 19.1 million jobs have been created since April of 2020, so that's basically since the pandemic. But we are still about 3 million jobs short from pre-pandemic levels. So we have made a lot of headway over these last 2 years, coming up in 2 years in April, but we're still about 3 million jobs short from where we were in March, January, or February of 2020. What was also a great thing was that the average hourly earnings increased by basically 23 cents an hour to $31.63. So that is great for wage earners. That is basically saying that wages are going up across the board, and just another again, I don't want to keep being a broken record, but pre-Russia, Ukraine, this was another reason for the Fed to increase interest rates, because this part of the sector and one of the main pillars that they are focused on was going and trending in the right direction. Unemployment rate stayed at 4%, and so that was unchanged from month over month. And then, of course, a week from today, last Monday, is when Russia began the invasion. Sunday, our Sunday night, Monday for Ukraine and Russia, started the invasion of the Ukraine war. And so that has really put a damper on the market and has really created a lot of uncertainty. We have heard many different things between sanctions, between different nearby countries setting up for NATO and having those additional troops kind of come in. President Biden has said in the couple of speeches that he has had that I have witnessed that he was not going to be sending any troops into Ukraine unless they started attacking a NATO country, which is kind of like Poland and Finland right next to that. But we're not directly going to be helping Ukraine because they are not a part of the NATO, one of the NATO countries. Again, as I was reading this and briefing myself to talk with you all today about this February news, I didn't realize so much things had happened and occurred in the month of February. And so we had continued earnings going into, at the beginning of February, earnings had somewhat died off. We had a couple major ones. Square was last week. I'm trying to think who else was last week. But pretty much everyone was pretty much over with kind of mid-February. But with all that being said, a lot of the earnings for the fourth quarter of 2021, or that quarter of 2021 if their fiscal year is off, were very good earnings. Holiday season was well. Yes, there was some supply chain issues. Yes, there was some headwinds with labor and shortages with labor in order to fulfill the needs of their customers, of their services. But overall, the quarter was positive. What we did see, or what I did read over a couple of the different earnings reports that I read and listened to, was a lot of headwinds going forward and a lot of somewhat uneasiness that companies were portraying about the quarter and quarter and year to come. And again, this was all pre-Ukraine and Russia, and so I can only imagine that some of these feelings have been exponentially increased now with supply chains for the energy sector is going to get all adjusted. Some of these raw materials that come out of Russia, Ukraine, and whatnot have been adjusted. So the headwinds are still coming, to say the least. We did get a update, and this is going to be one of the major dates that I want to talk to you about here in the next slide. Let's go right into that. But the Fed tapering is going to be coming to an end on March 10th. So Jerome Powell has basically stated to us that come March 10th, that is going to be the last date that they are going to be purchasing bonds, and that is going to bring an end to the tapering, and then again the new horizon of interest rates and interest rates hikes that we are going to be experiencing. Prior to Russia and Ukraine, we were kind of looking and kind of pushing towards that 50 basis points increase, but now it probably is going to be somewhere around the quarter, 25 basis points, so 0.25% increase. And it's going to look, hopefully we can get some information from him that he is going to share with us as to how many he expects, what he foresees with the Russia-Ukraine war, how that's going to play an impact into our economy and inflation that we are experiencing. But anyway, so a couple of important dates that I want you to look out for. March 4th, which is this Friday actually, February's employment numbers are going to come out. So on March 4th, in the month of March, they're going to go back and look back how many people were employed or fired in the month of February. Again, I would say this would be a little bit more important if Russia and Ukraine was not in war. But this is still going to give us an idea and going to really give the Fed an idea as to how stiff they want to be on these interest rate hikes. March 10th, as I mentioned, tapering is going to be coming to an end, but also on March 10th is that CPI report. So we're going to get another consumer price index report and basically tell us where inflation is going to be at on a year-over-year basis as well as a month-over-month basis. we are still inflecting up. We haven't, started moving sideways, or of course we really want to start moving down and get to that 2% level. So hopefully, this CPI report comes in somewhere in that 7.5 or lower, so that then at least we can hopefully start saying, hey, this is where we are turning the tide. We are moving sideways and going to start inflecting down. However, it's going to be difficult, I believe, in my opinion, because of this Russia-Ukraine war and the enhanced supply chain issues that are going to be caused because of this war. So I personally think unless we see a relief on the demand side, so that means customers aren't going out to eat as much, aren't purchasing cars as much, aren't going on vacation as much, unless we see a relief on that side of the coin, I believe inflation is going to continue moving upwards just because the supply chains, the labor shortages, none of this stuff is getting easier. It's staying the same or getting harder. And so if demand stays constant and this is going up, then not only theoretically, as you think about that, pushes inflation even higher. So we'll see what happens here. The following week on the 15th, the producer price index comes out. This one is not really as heavily followed, but this is basically producers, manufacturers saying, what is inflation doing on their core business and whatnot. Also, on that same week, we got the Federal Reserve meeting, which is going to be the most crucial part of this particular month, I believe, and we're going to hopefully get a very clear picture as to what the Fed wants to do going forward regarding interest rates, regarding their feelings on what Russia and Ukraine is going to play into our particular economy, and how they, continue to look to fight this inflation number and getting this number down to the goal of 2%. The other cool thing in March is if you're an ETF, mutual fund investor, this typically is where a lot of your dividends are paid out. So if your ETF, mutual fund pays out on a quarterly basis, is most likely going to be paying out in March. March, June, September, and December are kind of the major 4 months, with December being the most are typically the highest payouts, because some companies only pay out once a year and they pay out at the end of the year. But look forward to that if you're an ETF holder. Of course, if you know the channel, I only invest in ETFs, so a lot of our ETFs are going to be paying out in March, and so it's going to be nice to experience some income for just waking up. So with that being said, that was the first two things I wanted to talk about. I want to talk about all the major events that occurred in February. I want to talk to you about the important dates to follow in March. So again, put this on a calendar if this is important to you. If you somewhat want to try and time the market or come up with a game plan as to when you want to invest in the month of March, stay tuned to that Federal Reserve meeting. I personally, myself, is going to have my funds probably available somewhere around the 5th in my account. And then as we start getting any type of uncertainty or downside movement, I am going to be purchasing ahead of the Federal Reserve meeting. I would prefer to purchase ahead of the Federal Reserve meeting, because I believe that the Federal Reserve meeting is not going to be as hawkish or as aggressive as they possibly were. But I believe that they're going to be a little bit more easy, a little bit more quote unquote understanding, and so they're not going to want to spook the markets. And so I'd rather get any type of volatility that we see prior to that meeting. I'd rather buy in at that point than try and guess and hope that something happens on the backside of that meeting. So as well as you can possibly, if you time it right, you can possibly, the shares that you purchase this month, you have to look at the ex-dividend date, but the shares that you purchase this month, you can possibly get dividend payouts for those shares. So all of our particular shares kind of pay out mid-month, so we theoretically need to be in them. I would say, I have to look and see, but by the 13th, I would say the 12th to the 14th, we theoretically need to be in those particular ETFs, or any shares need to be purchased prior to those dates so that then they can get paid out kind of the 15th to the 20th of the month. If not, then we just get pushed out to the next payout, which will be in June. But with that being said, let's talk about what we did in February for the portfolio update. What really saw a lot of attention this particular month was our crypto portfolio. So as you can see here, my goal is really to have 13 blocks of our 5 core holdings in crypto. our 5 core holdings are going to be Bitcoin, Ethereum, Cardano, Polkadot, and Chainlink. So as of right now, I believe Chainlink and Polkadot are the closest to having 13 blocks. I want to say I'm only about 5 coins away on Chainlink to having a total of 13 blocks, and then I'm about 20 coins away on Polkadot, I believe, before we have 13 blocks there. Polkadot, no, I am lying. 60 coins away. 60 coins away. So those are the 2 closest that we are looking to get that. But long story short, we were able to stake 2 new blocks of Link, 3 new blocks of Polkadot, 4 new blocks of Solana, 1 of VecChain, 1 of Ethereum, 1 of Cardano, 1 of Polymatic, and 1 of Bitcoin. So we were able to really, really increase our cash flow this particular month with the investments that we made here. A lot of that really occurred because I did put in an additional $800 into the portfolio right at the invasion, or no, technically not right at the invasion because the invasion happened on Monday. But Thursday morning, if you recall, the Dow had a 800 point drop, and I was able to put 800. I had some money sitting aside, and I had some money sitting in the account, and I had $800 ready to go. And once I saw some of the crypto pricing that we were experiencing, I couldn't not let that pass me by. So I was able to purchase a couple blocks just in those purchases that occurred last Thursday, and so that allowed us to get a couple more blocks in this month before the month closed out. The other thing that I did was I sold Fetch AI. So Fetch AI was a cryptocurrency that I had been holding basically since the beginning of my cryptocurrency time in August. I started investing in cryptocurrency in August. Or August or July, and that was one of the original holdings. But once I began to see the pricing of Solana drop so much, I switched out of Fetch AI. I sold that at a $600 loss, and I then began to put all of that money into Solana. So right now, I believe we own 6 or 7 coins of Solana, and going to continue just DCA into that. I want to get a total of $1,250 invested into that particular position and try to get as many coins as we can. Solana pays a 3% a staking rate, so it provides a little bit of earnings on a weekly basis, which we are very excited about. The other thing is I thought was the best time, but we made our brokerage purchase on 2/11. The next best time was, if you didn't guess it, was this past Thursday, which was the 24th. It was the 24th. But neither here nor there. It worked out perfectly for us because we were able to lower our cost basis from 76.81 to 76.22, and that is across the whole portfolio. So all 15, 16 positions. Again, though, I didn't make any purchases for this particular month in the growth portfolio, only in the buy and hold portfolio. And so with that being said, I'm going to take you over to our what our accounts actually closed out to be for this particular.
All right. I forgot to add in all of the numbers to the brokerage and whatnot. So with that being said, this is just a breakdown as to where our accounts ended as of today's closing. Of course, crypto is a constant mover. The market stays open 24 hours a day. And so at the time that I went to gather this information, this is where our account was sitting at. And so let's start off here with the brokerage account. So today it closed at $89,216. We are still down pretty heavily. If you recall, if you've been following the channel, this account hit $100,000 back in November and hasn't seen $100,000 since, even though with the constant $3,300 being added on a monthly basis. Now, in the short term, I'm not upset because, again, this is allowing me to purchase a lot more of my ETFs at a lower cost basis. As you saw in the previous slide, it is allowing me to bring that cost basis down. So because this is money that is not needed over the short term, within the next 2, 3, 4 years, I'm totally fine with this account kind of moving sideways and or even moving slightly negative, because that is meaning that I'm able to purchase more shares on a monthly basis, meaning that then I'll be able to get more dividend income on a quarterly basis, as well as once that investment begins to take off and starts to return to those 12, 15, 18% year-over-year returns, that's going to be at a higher dollar invested. So, for instance, right now I want to say we have invested, honestly, $110,000. So I'd rather receive, a 20% upside on $110,000 than see a 20% upside on $60,000. And so again, the more money that I can get into at these levels, then that means the bigger upside that I'm going to see once that market starts to take over. But with that being said, we deposited $3,300 into our brokerage account. We only gained $2,088, which means we lost $1,300 just off of the new money that was invested this particular month. However, on a month-to-month basis, we were still up 2% from last month. Last month, we came in somewhere around $87,000, and now we're at $89,000. And one could say, well, you're only up that much because of the dollars you invested, and they would be correct. But again, going back to what I just alluded to, totally fine with it. I want to continue to invest as much as I possibly can at these levels, especially with the uncertainty that we're seeing in the market due to the Federal Reserve as well as to the Ukraine and Russia war. What you see down here below that, the dividend staking / the next goal. So in quarter one of 2021, we only received $10 in dividends. As of right now, we have already received dividends of $10. A couple of our ETFs actually pay out in January. And so just with those two ETFs, we have already past the $10 mark. So we're probably going to come somewhere around the $35, $30 mark. But of course, I will fill you in with all of that information come the next financial update at the end of March, because all of that information will be given to me. The next goal that we have for our particular portfolio is getting to $150,000 account value, not dollars invested. Account value being $150,000. And as you can see here, our accounts hit $100,000 on November 4th of last year. So now let's take you over to retirement. The account value closed this particular month at $12,156. We invested $1,000 into this particular account in the month of February. The overall gain was only $193. So again, for the money that we invested at this particular month, we actually lost 90% of it. Again, short term, this is my retirement, so I have an even much longer horizon on this. And I'm not going to touch this till I'm 60, 65, which is 35 years for me. So as much money as I can get in at the lowest cost basis over the next 25 years will be perfect for me, because I can't touch this money literally till I'm 59 and a half, which is 29 and a half more years from where I'm currently at today. So totally fine with that. The dividends that we received on this particular account, quarter one of 2021 last year was $22. That number is going to come in much higher this particular month now that we have had a year of adding to this account. And the next goal for this particular account is $25,000. And we hit $10,000 in this particular retirement account on November 28th. So again, we're moving in the right direction. It's not big gains, but again, it's just allowing us to continue DCAing at a lower cost basis, bringing that cost basis down month over month, and totally fine with that because our horizon is so long. On the crypto side, this is where it saw the most bang for our buck. We typically kind of only do around $800. Come about May, I'm going to just start doing a consistent $1,000 a month unless we get opportunities such as the one we just saw. But this particular account closed at $8,400 this month, and then we invested $1,600. This is where we saw the biggest gain, so we basically matched dollar for dollar. But I do want to give a caveat, is that crypto just took off this morning. So we were actually somewhere around the $7,800, $8,000, all the way up until this morning, basically when I woke up. And then once I woke up, it had jumped, and now we were at $8,400. So we made about $400, $500 just in today, which padded that stat. But still, we're up 18%. I don't have any dividend staking numbers for you from last year, so we are moving forward. I didn't start staking until December of 2021, and I really didn't have the type of numbers and data that I like to have. So going forward
is when I'm going to start accumulating all of this information, and I'm really going to be able to see the year-over-year returns. I'm still going to give you the staking numbers that we have at the end of March, and that is going to be on a weekly basis. So how much money is our portfolio generating on a weekly basis? I'm going to share with that to you at the end of March. And then our next goal for this particular account is basically just to get to $10,000. And I started investing in crypto on July 3rd, so right before 4th of July. And as you can see, we are $8,400 into it. But we have invested, literally dollars invested, probably somewhere around that $10,000, $11,000. But we are negative $3,000, as you can see. So with that being said, I am very happy with the month of February. Took advantage of some dips in crypto at the end of February. Did make an overall good purchase on the 11th of February in our brokerage account. Retirement, just constantly trying to put that $500 in. And then I am staying on track to be caught up with 2021's allocation for $6,000 in the IRA by April 3rd or so. And then going forward, I never will have to play this catch-up game because I'm doing that $500 a month, which is at $6,000 over the course of a year. So with that being said, thank you guys very much. Give a thumbs up to the video, and I look forward to seeing you at the next financial update here shortly. Talk to you soon.